Hey everyone, welcome back to Land Investing Online, where we teach students how to profitably buy and sell vacant land. My name's Daniel Apke. This is my brother and business partner, Ron Apke. We have a Discord on landinvestingonline.com that's free. If you're interested in land investing or want to learn more, definitely join that Discord. But other than that, how are you doing, Ron?
I'm doing good. Excited to be here.
Awesome. Today, we're going to go over what to do with your land flipping profits. This is a very lucrative business. It's a really big topic, what to do with all that profit that comes back. And there's a balance to it. We'll get into that later. But before we start, let's go over a question from one of our members. It's a unique question because it's almost more of a situation that they've been in. So they wrote to us and said, I have a property. It's buy for 50,000 and I'm listing it for 120,000. It has an old structure on it that kind of is falling apart and doesn't look great. Does this kill the deal, or should I get this removed before I buy the property? What do you think?
I mean, 100% buy the property. If you're that sure about the numbers, like it's a great deal. Don't worry about the structure. Personally, I wouldn't take it off even after you purchase it. So the end buyer can worry about that. But with those numbers, guys, 50,000 sell for 120. A structure or some beat up structure, as long as there's nothing like environmental that's messing with the land, you're more than okay. Buy it. That's all I gotta say.
People like those structures. That's more of an attribute. I mean, even if it is falling apart, like someone might see it as another opportunity to fix it up maybe, or use it as a hunting stand, or maybe they just like the way it looks. It's interesting. Those usually are not a bad thing, especially because it means an area usually had to be cleared out, and either, things had to be put in place, electricity had to be there, whatever the deal is. That's usually more, I'd say, a benefit than a con, because people, especially if you have a bigger piece of land and this is just sitting somewhere in the woods, it's definitely been a good thing in our past situations. We've been in this situation a lot of times. I love seeing structures on properties we have. I don't care how beaten down it is, how fallen apart. It's just a good sign to me. I like that a lot. It also shows it's buildable, right?
Yeah. And it's nothing against the question by any means. It's a very, very normal question that we get from newer students. And they get really worried about it. And I just every time, just buy it. Don't worry about that. Just buy it. An old mobile home, it doesn't have a roof, buy it. If your numbers work without the mobile home or without whatever the structure is, the numbers work with it.
Yep. And at the end of the day, trash removal, if you did need to remove something's not that much. I'd highly recommend not removing it unless the buyer on the end has it contingent on that or something. But other than that, we won't get too deep into that. Let's go into the show. The topic of today is what to do with your land flipping profits. If you're new here, we buy land extremely undervalued, 30 to 40% of what it's worth, and we resell it within 2 weeks, typically after buying it, for over double our money. It's very, very lucrative. This is such a hot topic because people have so much profit coming in. They just really want to know they're doing the right things with their money, and putting the profits back in the necessary buckets is very crucial, especially at first. So this is going to be a really good topic for you guys. You want to get it kicked off, Ron?
Yeah, for sure. If you guys are watching this and have not watched our interview with Ashish, watch that before this, because there's a bunch of good nuggets in there. The biggest thing, guys, is when you're making the type of money flipping things, like we are, like our students are, there is going to be a significant tax bill at the end of the year. So that's what our kind of mindset is. And we teach our students when we're talking to them one-on-one, like make sure you put your money in places where you can hopefully minimize taxes at the end of the year. I don't want to get into all the details with it, Dan, but as far as what we're doing personally, we're looking at commercial assets, actual structures, not land, bigger multifamily buildings and that kind of stuff, to help with depreciation and all that, to help with our tax situation.
Yep. Watch that video with Ashish if you haven't seen that. But in terms of what to do, say for that situation you just mentioned, it's best to be a full-time investor because you get the depreciation advantages, but it's also, there's advantages even if you're not a full-time real estate investor as well. We're not going to dive in the weeds there. So what Ron and I are doing, we're putting a lot of that money into long-term investments. mainly for tax, but also, real estate's not a bad thing either. It's really been good to us in terms of rentals and things like that. That's what we're doing with a lot of our profits. But let's talk more about land investing, right? So say we were in 8 to 10 months and we've profited $300,000 or something, which is very, very, very doable your first year if you send the mail out and follow our course. Say your profit $300,000, that money's all coming in and out. What do you do? Do you put it all back in your own properties? You don't want any deal funding? Do you pay yourself? What is your advice for someone who just wants some advice on what to do with their money?
And keeping it in land, as far as keeping it in land in?
I'd say so, because they want to grow this business right now. I mean, they're not really looking at structures yet. I think on year 2 and 3, and it depends your situation, you should really look at structures and real estate, long-term real estate. First year, you're trying to grow this business to $1 million within another 6 months or so. Let's build this business up as big as possible, use the profits later. So what to do in land to grow this business? What would you do?
Yeah, I mean, once you have a certain amount of money, guys, like you can look into longer term things in land. You can look into some subdividing where you don't need to turn your money over as quick and your profits are going to be higher on those. I think that's great for our students to look into, and that's what we push people, and that's what we're teaching. We teach some subdividing stuff. I think that's a really good thing to go into. Longer process deals where you might get a larger profit, like I said. But it's obviously you're gonna have to wait a little bit for your money if you're doing subdivision, or if you maybe some areas just don't sell as fast and you're okay waiting and selling it for market value opposed to selling for 80 or 85%. We have a big community of people who fund deals. So you have the option to put your money in other people's deals and become the manager. Become the investor and they're the manager. So if you put them in, you have some kind of profit split. And you sit back, you don't do anything hands-on with that deal, and you'll see the money come back as long as everything goes as planned. So I think those are a couple of things you need to think about when you have that money. Obviously, keep on funding your deals, pay yourself some fair, and be smart with your money with all of that. Not financial advice, but I would pay myself some, but go from there. I think bigger deals is a really good way to go.
I agree. And one mistake we made, I think the first year, is we really didn't pay ourselves at all, zero, until December. And we consistently put this money back into properties, which is good because you get more eventual income, but it's all delayed. The cons is you're all out of money and you don't have any to pay taxes or buy other stuff or really pay yourselves. We didn't even pay ourselves at all. So I think if I could go back and do that, I mean, I liked putting it all back in because that eventual money comes and I was okay with that. But I think taking a few of those deals and just getting good deal funding partners would have been more ideal. So the thing with this business, if you're growing this business, I don't care if you have $1 million. I don't care if you have 100,000 or 50,000 or multiple $1,000,000, you're going to run out of money eventually. And I explained it to one of our members the other day. Say you're doing $1 million a year in land flipping, right? You have 10 properties you're buying, you have 10 properties for sale, and you have 10 properties on the sell side escrow. If you're keeping that 10, 10, and 10 all the way across, you're not going to grow unless your deals get bigger and bigger. Let's just keep all deals are equal right now. To grow that business, you're going to have to buy more than 10 deals. If you're all making $20,000 off one deal, you're going to have to grow that buy side to over 10 deals, right? So say the next month, instead of having 10 deals, you're buying 10 deals for sale and 10 deals on the sell side or on sell side escrow, you have 20 deals you're buying. So you have 20 deals you have to close now, and you have 10 deals on the other side that are closing on the sell side. So 20 deals you have to buy and 10 deals you're closing. That money gets thrown off, right? So you're going to need deal funding as long as that grows, because you're going to be imbalanced to grow that. It's not going to be 10, 10, 10 anymore. It's going to be 20, 10, 10. So you're going to have less money coming in and more money going out, and you're going to run out of money. So I think a big part of this is balance. Fund other people's deals, get some of your deals funding where it makes sense, and fund your own deals as well. I think diversification to that aspect is really crucial.
I agree. I don't have much to really add to that. That's a really good point. With that example, guys, if you are buying 20 deals for $20,000 each, Like that's $400,000 really fast. And you have one deal that might be $100,000 that you're buying. Like you're getting in, if you have 20 deals you're buying, it's probably $500,000. So you guys can see how fast anyone can run out of money. You're buying 40 deals, you might be paying $1 or $1.2 million. So you need partners, long-term partners with that. Like Daniel said, fund deals and fund out your deals as well. I think it's really important kind of spreading yourself out. There's not, when you fund deals, you don't have to do the work, and don't take that lightly. That is really important, that you don't have to put in the work. It takes time. It takes time off your plate, or gives you more time to spend on other things. So I think Daniel kind of nailed that as far as spreading your time out, spreading your money out in different places.
Right. Because the ones you're buying now aren't going to close on the sell side for another, what do we say, 60 days average or something?
And the sell side's always the smallest. It's always going to be the smallest amount of deals from what I've seen.
Exactly. Especially if you're growing. Well, that's really all I have to cover. I think the main takeaway from this is just really spreading yourself out. Planning for cash flow in this business is very, very difficult. So keeping a reserve of, I think, 3 to 5 months worth of mail costs and overhead. Everyone has a different number there. I would keep, you don't want to we run out of money all the time in our bank. But you want to always have enough for mail and your overhead and your employees or whatever that is. You don't want to be, like we said in an earlier episode, you really don't want to break up your mail, your consistency, no matter what deals you're funding if you run out. So I'd say having 3 to 6 months of mail cost is really crucial at all times.
Yeah, I agree. And that's kind of something that, like Daniel touched on, that we kind of probably over leveraged, I would say the word is, our first years back when we did this, our first year. And then you over leverage, and it's stressful for one. You want to be cheap and not fund your deals out, which isn't the smartest thing financially either. Like you want, like Daniel said, have those reserves, whether it's 20,000 that you want to have for mail costs, like have your reserves. Don't expect that next mailer to make you $100,000. Just keep on. You want to calculate obviously what money you have coming in from your sell side, but try not to over leverage. Use our community, use the people we know, use us to partner with on deals to kind of take that pressure off.
Yeah, and we used to over leverage a ton. I mean, I remember the first time we had like $400,000 or $500,000 in our bank, and we're like, oh my gosh, we have so much money. And then we looked at everything we're buying at that time, and literally like a day or two later, we had nothing. And then all of a sudden we have $20,000 of mail to get out or whatever, $10,000 of mail plus our employees and all that. It's stressful over leveraging, and it's also riskier. So I know everyone wants 100% of the profits themselves, but it's also 100% of the risk. So use other people's money to make you money. It's not, I mean, realistically, it's 0% risk. I don't want you to throw any bad deals out there because of that, but it really, from a financial standpoint, it's 0% risk to your finances if you use another deal funder. Exactly. So that's one of the beautiful things. Although the profit split and it's a lot less, it's 0% risk. You don't have to spend $1 of your money. It's a great thing. And I would really utilize that if I were you guys. And it's one of the things Ron and I didn't do enough of at first that we starting to do more and more of. I mean, just to diversify, even if we have money, we'll use deal funders at times.
Yep. And to talk about Daniel's point about that 400,000 to zero, keep in mind, guys, when we're saying this, like, it's not a bad thing. We're happy when we're buying $400,000 of land because we know it's worth $1 million. And that's I don't know that situation exactly, but I remember it when that money went down from whatever, I think it was 425 or something down to 10,000 or something, which is 100% over leveraged. But then we own $1 million of land that we know we can sell. So it's not a bad thing, but just be smarter with where that money comes from.
It comes down to trusting yourself, the business, your process, and the land, honestly. And it can be scary, but we trusted, and we've never, ever lost money on a deal, and we've never been close to losing money on a deal. We double almost every single deal we do. So just having those good processes, following our course and following all the steps. Other than that, I mean, do you have any closing remarks? I said everything I wanted to get out.
No, I think that's good. Talking about that real fast, how we haven't lost money. I was talking with one of our transaction coordinators today, actually, and we were talking about a deal we bought for 12,000 and sold for 18 or 18.5. And I was complaining and like, at the end of the day, you buy for 12, you sell for 18, and we're not happy with the margin, I guess. But we're making $5,000 or $6,000 doing relatively little amount of work. It's just crazy when you think about it like that, Dan.
Yeah, but I also met with a wholesaler earlier, and he's saying his average profit was around $8,000. So if he's buying for 100, he'll sell to an investor for 108, essentially. If we're buying for 100, we're almost always selling for over 200. There's times we won't, but there's these deals: buy for 12, sell for 18. That's probably the worst deal we've had in terms of finances. But at the end of the day, it made us $6,000. It's only $12,000 out, and we made $5,000 or $6,000 after all said and done. That being the worst deal we've ever had isn't that bad. So I just think the risk in this is so minimal, especially after talking to my wholesaling friend back home. It just made me realize how good of a business model this is compared to that.
Yeah, it's crazy to think about. But no, that's all I got on this. I think it was a really good topic and really helpful.
Awesome. Hope you guys enjoy. Don't forget to go to landinvestingonline.com. Check out our free Discord. We have tons of information on that website as well. Scroll around, shoot us an email, or join the Discord. Say hi. We're looking forward to seeing you guys there. And thanks again for joining.
Thanks, guys.